waiting here, guys, to make sure that we are actually live, and it looks like we are. Good afternoon. It's just now noon, and we are here today um, with Protect Yourself, talking about auto and renters insurance. Um, this is Student Legal Services. If you guys don't know, we are your free attorney for you as long as you are enrolled as a UCF student. And we handle things like landlord-tenant law, traffic tickets, consumer issues. And we do see a lot of students who have been involved in traffic accidents and the various issues of insurance and things like that. And then, a good portion of what we do is landlord-tenant law, and sometimes a good amount of that involves something that potentially could invoke renter's insurance. So we'll be talking about that today as well. We cannot handle claims against the state of Florida or student versus student matters and other things like that. If you are here watching today because you need credit for Link or something like that, Link, if you don't know, is for first-time students here at UCF for transfer, or what you might have heard of called as FTIC, so freshmen, even though you might not be freshmen in credits, freshmen's coming in for the first time to a college setting. And you can earn points and other things for different raffles. There used to be a scholarship involved. I'm not sure about what exact prizes are being offered at the end of the semester, but if you need that, lead scholars or any other credit, I would ask that you please fill out that Qualtrics form. It is linked in the description box for this video. Really, if you're a student and you're watching, we really would ask that you consider filling that out so that we could get some feedback from you. In addition to asking, if I need to let anybody know that you are here today, we also ask if you're interested in seeing us do presentations on any other topic and things like that. So we really would appreciate your feedback as far as that goes. And if you have any questions afterward or concerns, our email address is down below as well, and you can reach out to us there. Again, my name is Jamie Owen. I'm one of the attorneys here. I handle all of these presentations, so if you've watched one before, you probably have seen me. I am on the civil side. All of the attorneys that are joining me today also practice civil, and so I'll let them introduce themselves. Patricia, if you want to go ahead.
Hi, my name is Patricia Dullahan. I'm an attorney here at Student Legal Services, as well as being the director. And I think Jamie pretty much explained what we do here. So, please feel free to come by if you ever think you need our assistance, or give us a call or email us. Thank you.
Michelle?
Hi, my name is Michelle Koo. I'm also one of the attorneys here, and I also practice civil law, meaning non-criminal and non-traffic. We do have a fourth attorney who's not in this presentation today, but he handles the traffic tickets and the criminal defense law. So we're glad you could join us today, and hopefully you'll find this presentation to be informative. Thanks.
If anyone has any questions during the course of the presentation, you might not really be able to see me very well because I know I'm a small square, but I will be monitoring the chat periodically to see if there's any questions. So if you do have a question, you can put it in the chat and we'll try our best to answer it for you guys. Let's go over. Okay. A lot of times what we'll hear from students, especially when they've come to us and they're having issues with making a claim, usually for auto insurance, but sometimes for renter's insurance too, we'll hear, well, I thought I had full coverage, or I was told I had full coverage, or, that's how it was sold to me. So a lot of times I also kind of say full coverage is a myth, or it's in the eye of the beholder, because what you think might be full coverage, or what an agent says is full coverage, may not be right for you in your circumstance. Or if they're just, when we're talking about auto insurance, talking about the minimum that you need to keep your license and registration good, it may not actually cover you in a lot of different situations. So you're going to need to make sure when you're talking about auto insurance especially, but also renters, that you make sure you're getting the right type of coverage for you. There isn't just one type of comprehensive policy. There's a subtype called comprehensive, but more colloquially, comprehensive policy that's going to cover every situation. So you need to make sure that if you want coverage in a certain situation, that you purchase that sort of coverage. It's very segmented. So this is, we're going to go through going forward more of what the different coverage types are for auto insurance. But there are many, many different types of subtypes of auto insurance that you can purchase. And they're all something that you pretty much need to opt into beyond the bare minimum to make sure that you have those sorts of coverages. So Florida law, to keep your license and registration current, and there's going to be an asterisk to this, like there is to everything we talk about in the legal field, and I think you'll kind of see that moving forward, and is that you need personal injury protection, so sometimes called PIP. You might hear me call it PIP, which is you have to have $10,000 of that, and you have to have $10,000 worth of property damage coverage. That's all you need to keep your license and registration current. However, there are some other circumstances which you'll kind of be getting into, where if you don't have that another type of coverage, you're kind of sneakily required to have it, and that's bodily injury liability. And then also the other sorts of coverage you don't have to have. Again, asterisk, you might have to if you have a finance vehicle, but if you don't have it, then you won't have any protection in those circumstances, and we'll be breaking it down here for you.
Do you want to explain a little bit more about what PIP is?
Yeah, we kind of go through the different coverage in a moment. We'll get to that. And I kind of just alluded to this, is that different circumstances might require different amounts. So if you are leasing or have your vehicle financed, meaning you have a loan, your loan is probably going to not probably, it's going to require you to have collision and comprehensive coverage, which we'll break down what that means in a moment moving forward. And you might be required to have more property damage than the $10,000. Sometimes we've seen it be quite high. Caution you on leased vehicles. Sometimes leased vehicles require a really high level of coverage. We've seen that a few times, which kind of makes the option of leasing less attractive, because if you're getting a lease to spend out less money, you might be making up for it in the additional required coverages. And motorcycles have differing insurance coverage that you do there. So since you asked, Patricia, do you want to go ahead and go over what personal injury is?
And this is just Florida law. Each state has their own different laws. So Florida law requires you to have PIP, which is personal injury protection. So what that means is if you are in an accident and you are hurt, need to go to the doctor, regardless of who's at fault, you go under your own PIP policy before you can file a claim against the at-fault driver's insurance. So people sometimes find that confusing, why they have to make a claim under their own insurance. Is because it's considered like a no-fault state up to that $10,000. So that's what PIP is, and that's what you require. One of the two components you require to have to register your car. Okay, so it covers 80% of your medical expenses, and you are responsible for the copay and then for the deductible. and you get to choose your deductible, which can be anywhere from $250 to as high as $1,000.
Or none. Or you could, there's also an option to have no deductible as well.
And then they also pay 60% of your lost wages. Recently, well, not that recently, 2013, the laws changed that in order for you to even get those benefits under PIP, you must seek medical advice within 14 days. So you must seek medical treatment within 14 days. And then it's further divided into 2 tiers. In order to get the full $1,000 benefit, you must be diagnosed with an emergency medical condition. So it's more like now it's 2,500, 10,000 coverage, depending on whether or not you have been diagnosed with an emergency medical condition.
Yeah, I think a good tip from just what I usually advise students is if they're in an accident, even if they think it's minor, like a small fender bender or something like that, to go ahead and go get checked out. You know, go to a walk-in clinic or go to your doctor and just get checked out, because sometimes what happens is those sort of hidden injuries or soft tissue injuries, sometimes they don't really manifest themselves until a little bit later. But with the 14-day time limit, that time period can go very quickly. And so if you go in 3 weeks later and they find out, oh, you have this sprain or that, you know, you've got to go to a specialist and do a bunch of tests or something, those medical bills can rack up. And so that's where this PIP coverage would come in handy. But if you went too late to seek treatment, then you may be out of luck, you know, according to your insurance policy. So.
Unfortunately, as someone who's been in a few accidents, I can definitely say, you know, at the scene when the adrenaline is high and pumping, you might not feel bad at the time, but maybe the next day you feel like maybe you did some like killer workout the day before, and you're feeling a little bit sore. So when in doubt, you know, at least you can go get checked out by your student health services if you're on campus or nearby, or, you know, a walk-in clinic or something of that nature to preserve your potential ability to have a claim. And I also usually will advise students to try not to make too many decisions about what your injuries early on. Sometimes the other side might try to get you to say that you're not injured very, very quickly after the accident. And so you might just want to kind of see how things play out before you back yourself into any sort of corner. The other form of required coverage is property damage. Do you want to handle that, Michelle?
Sure. So property damage basically means that you're buying insurance to insure against your liability that you might cause to somebody else. So meaning if you're in an accident and you cause harm to someone else's vehicle or to other property, sometimes, and in the slide, there's some examples like if you hit a sign by the side of the road or a guardrail, and we've had some cases like this, then your insurance company will cover the damage that you caused. And this is a required component of auto insurance policies here in Florida. Up to $10,000 is the minimum required coverage. Of course, you can opt to have more than that, but it'll cost you some more. Notice the bold print on the slide. This type of coverage does not pay for repairs to your own vehicle. So if you're in an accident, your car gets damaged and all you're carrying is the minimum required by Florida law, which is property damage that you cause to others, and PIP, personal injury protection, that we just went over in the last slide. Those are the only two things that are required. And if your car gets damaged in an accident, your insurance is not going to pay for it.
So I'll kind of cover on this. The risk of only having the required coverage means that there's a lot of situations that you could be in where you will not have coverage if you only have the bare minimum, even if you're not at fault. So a lot of drivers in Florida don't even have any coverage at all. So there's lots of times where if you're not at fault and you're hit by somebody who has the minimum $10,000 worth of property damage, if you're driving a nice new car, that might not fully reimburse you for your damages. Or if there's multiple cars involved in an accident, it might not cover you. But lots of people don't have anything at all. And if they don't have any insurance, it's probably not very likely you're going to be able to successfully sue them to get reimbursed for your damages. So that's where collision coverage could come in and protect you. You also wouldn't have any coverage if your car is stolen, or if you're at fault and you damage your car. If it's damaged in a hurricane or thunderstorm, those are pretty, typical things that happen here in Florida. That sometimes result in some flooding or tree branch being, coming down on top of your vehicle and potentially causing damage. You could potentially be sued in excess of $10,000 if you don't have enough coverage. So if you hit a Lamborghini, that's obviously probably not the average car going around, but I do see some very fancy cars on campus, and up and down Alafaya and University Boulevard that if you were to hit in total, $10,000 would not cover that. Or injuries to the other party. So if you are at fault and you injure someone and it's in excess of their normal coverage, or they don't have coverage at all for some reason, they could potentially sue you. I don't know how likely that is in that scenario. We do see a scenario where students are being sued, and we'll get to that a little later. But, if there is a court judgment against you related to an accident, not for credit cards, not for other sorts of debts you might owe, but if you do get sued and it's related to an auto accident, one of their remedies is to get your license suspended. And if you are at fault in an injury-causing accident, your license can be suspended with no court proceeding held, because bodily injury liability coverage is sneakily required. And that rolls us over into bodily injury liability. Do you want to cover that, Patricia?
So you're not required to have bodily injury liability to first register your car. But if you're involved in an accident where somebody claims a personal injury, at that point, if you don't have the bodily injury liability, at least the minimum of $10,000 and $20,000, then your license can get suspended. So typically what we'll see is that somebody comes with a notice from the Department of Motor Vehicles saying you were involved in an accident, there are the involving personal injuries, we're going to suspend your license within 30 days. Please provide us proof that you had bodily injury liability or a release from everybody that was hurt. So if you didn't have bodily injury liability at the time of the accident, you're kind of out of luck. You're not going to get a release from somebody who's claiming that you caused them injuries. In that situation, you may be able to post a bond with the Department of Motor Vehicles. And the bond is sometimes varies from 100, depending on the type of injury, to 1,000. But that's not the end of it. I mean, you can post a bond, but if you get sued later on and they get a judgment against you, then you have to pay the entire judgment within 30 days or enter into a payment agreement. Otherwise, your license is going to be suspended. So what we see happening sometimes is that you didn't have bodily injury liability because you're not required to have it first registered a car, and you went for the cheapest possible insurance you could get. And the other you're involved in an accident. The other person claims a personal injury. They contact your insurance company and they say, now the person, our insured does not have bodily injury liability. So then they go under their own insurance, which is called which an insured motorist, and they file a claim under their own policy. The policy pays them out, and then they come after you for what they pay, because they're saying we pay something that you are responsible for that you should have paid. So that's when we see like lawsuits for, 100,000, 70,000, 30,000, whatever they pay to their insured, they're now coming after you. And that's when the risk of you losing your insurance, your license and driving privileges becomes very high. And all this could be avoided if you at least buy the 10,000, 20,000 bodily injury liability, which you're initially not required to have, but in fact you are once you're involved in an accident with personal injury claims.
It's sneaky. Lots of people don't realize that they really should have it. And, it can be 10, you'll sometimes hear it's 10,000 per person, 20,000 per accident. That's how bodily injury liability coverage is styled. So that's how they sell it. That's the minimum. You'll hear it called $30,000 combined. That's the smallest type of bodily injury policy generally that you can purchase. I would recommend buying more if you can. I know it's not cheap, but if someone leaves the scene in an ambulance, and they go to the ER, you're looking at 10K right there, basically. That gets very expensive very quickly. And then, beyond that, and yes, your license might not get suspended as a preliminary matter because you had that, but if you're underinsured and they go under their underinsured coverage, you can really get smacked for that. I think the most I've ever seen someone being sued by an insurance company that paid out and then was coming after the underinsured person or uninsured in this case was $158,000, if I recall correctly, which in that case, it's financially devastating. That person's best option was probably to pay for bankruptcy because the initial little bit that I tried to help negotiate for what little they could pay was not really, nobody really got back to me. So I assume that meant no. So, that's kind of, where you're at. And it's also in Florida to keep in mind, it's also not just the driver who can be held responsible, but it also is the owner of the vehicle. So a lot of times that also can mean a parent is also being sued, or let's say a student who maybe lent their car to a friend, and now a lot of times your insurance policy is going to have limitations on who you can lend your car to, and that's a whole other thing. But just don't do it. It's really the good recommendation. But you lent your car out to somebody and they gotten into an accident, and now you're being held responsible equally to it because you're the owner of the car. So keep all of that in mind. I think this is like, you really need to have bodily injury liability coverage as much as you can afford.
Yeah, even Jamie, let me jump in briefly. Yet, even in other cases, maybe not as drastic as the $158,000 case that Jamie mentioned, where that person probably did sustain some serious injuries. But we've also seen cases at the other end of the spectrum where the student says it was just a very minor collision, very minor fender bender. I only tapped his car. I only tapped her car. Everybody drove home. Everybody walked away. No one was taken by ambulance from the scene. And then 2 years later, all of a sudden, the student is getting a letter from the DMV threatening to suspend their license, referring to this accident from 2 years and 5 months ago where the student just thought they tapped the car in front of them, and the other side apparently claimed injuries, racked up a bunch of medical bills, and then before you know it, you're in this predicament where if you didn't have bodily injury coverage at the time of the accident 2.5 years ago, now you've got to jump through all these hoops that we've just described to try to maintain your license and try to maintain insurance, which probably now will go through the roof for someone to insure you, and so on. So there are risks all the way around, even if it's a relatively minor accident. If you don't have it, it can still cause you problems, sometimes a long time down the road. It still pops back up sometimes.
And one of the things is we've seen where people don't get that letter, and then they're because they didn't update their address, or it went to a parent's house and they just never knew about it, and then their license is suspended, and then they're driving around with a suspended license. And if the officer believes that you had knowledge that your license was suspended and you were driving on a suspended license with knowledge, that's criminal. So that's a criminal offense that now you're having to come in and speak to Mr. Ruth, our criminal attorney, about, in addition to dealing with all of this insurance stuff. So this stuff can really have a lot of consequences. And accidents are incredibly common on campus. I've been in an accident on campus. They're incredibly common on Alafaya and University Boulevard. You have a lot of young drivers, a lot of high density traffic at certain periods of time. They just happen. Those parking garages are no joke. So, it's really a good idea to have as much coverage as you possibly can afford. Now, collision and comprehensive, this is not necessarily required unless you are financed, and this protects your vehicle. Do you kind of want to touch on these, Michelle?
Sure. So collision coverage is the kind that would pay for repair to your own car. So remember a few minutes ago, we said that if you only carry the bare bones, the bare minimum of property damage coverage, that covers damage to someone else's car. So collision coverage protects you, protects your vehicle if something happens, whether it's an accident or some other freak thing that happens to your car. Generally, there is a deductible, so that means you're going to have to pay the deductible out of pocket first. It can range from $250 or $500 up to $1,000 or more. Again, the lower the deductible, usually the policy will cost a little bit more. So that's a decision you'll have to make when you're weighing your options and getting quotes from insurance companies. But it's worth it if you can afford to add on collision coverage, because your own car will be covered. Otherwise, if you don't have it, you're going to need to pay on your own to take your car around to a motor vehicle repair shop, which can be very pricey, and pay for it yourself to get it fixed if something happens to it. Comprehensive coverage basically covers all kinds of other circumstances and things that could happen. Some of those things are listed on the slide. And some of those things do happen here, especially in Florida, being in the hurricane zone. Hurricanes, fire, windstorm, flood, falling objects. I've had my windshield replaced. I think Jamie has too, but I've had the windshield replaced before because I was driving on a highway one day, and unfortunately the dump truck, a few vehicles in front of me, had some rocks fly off of the top of it, and a couple of small ones hit my windshield and started to crack. The crack spread. So luckily I had the coverage, and so my insurance company ended up paying for the windshield to get replaced. Actually, I chose to repair it, because it was an older car, but they would have replaced it. So comprehensive coverage, again, if you can afford it, it's good to have, because it will cover a lot of those circumstances. Sometimes they're unforeseen, but if they happen and you don't have it, then you may be without use of your vehicle for a period of time while it's in the shop, and then you may get stuck paying for those repairs.
Mm-hmm. Or just be without a vehicle if it's totaled, if it's beyond
Right.
repair, which, sometimes I know some students, and for myself, for years, you're driving around a vehicle that's just not worth a whole lot. So, at some point it might just be, if your vehicle's worth $2,000, maybe it's not worth it to have collision or comprehensive to you, but that's something that you need to make a decision about, as far as whether or not you have it. And just know that, if something does happen, you're without that. The thing is, when it's totaled, they're going to only pay you out what the fair market value of your vehicle is. And so I recently was having this conversation with my sister, who has a 15-year-old car that has 200,000 miles on it, and that she loves, but it's not in great shape, and it was worth a lot to her, but it's not worth a lot. As far as the market's concerned, maybe the whatever you can get for salvage, that sort of thing. So you have to keep that in mind. I see some very nice vehicles with student decals on them that cost more than my car, and I have a decent car. And I see some vehicles on campus that are like the sorts of cars that I drove when I was in college. It was a beater. So, you just have to kind of keep that in mind, especially with comprehensive and with all of the construction that's going on. 429, 417, I-4, forever. It raises your likelihood that there's debris on the road and that you're going to get that. My spouse commutes on 414, and there's lots of dump trucks because there's a dump, and garbage trucks, and so he's gotten his windshield cracked multiple times driving on there, just because of the amount of debris there is on the road. So keep that in mind. Sometimes they can be repaired. If you have like a UV tint on your window, they tend to crack more. So you're gonna have to get a whole new windshield, as I learned the hard way. So that's kind of something to keep in mind. A lot of times collision and comprehensive, though they're separate types of coverage, are kind of bundled together to get. So
the type of cases that we see in this situation that, as examples, would be like somebody who was involved in an accident and they didn't have collision. They only had the bare minimum, which was the PIP and the property damage liability. So now they're involved in a collision and the other side is uninsured. Sometimes what happens, like at the accident scene, they'll give you some insurance card, but then when you call, it's not uncommon for it to have lapsed due to non-payment. So now in the situation, you have somebody who may have $4,000 or $5,000 worth of repairs to the vehicle, and they have the other side doesn't have insurance, and you don't have insurance. So it's not uncommon at all. We see that quite a bit, and we have sued people on this. I mean, I wish I could tell he was very successful. I mean, you do get a judgment, but still that, just because you get a judgment does not mean they're going to pay you. So it's not a good situation to be in. The other situation we have seen is students driving those fancy cars, sometimes paid for. And they only, again, they only have the bare minimum coverage. So they involved in an accident. The other person had insurance, but only had the bare minimum, which is $10,000 worth of property damage liability. But because you're driving a very fancy car, you may be looking at damages of $17,000, $18,000. Now, who's going to pay the difference? So these are the issues that we see all the time, and that's why it's so important that that you really think about your coverage and think, what can you afford to lose if you're in an accident? If you're in an accident with an uninsured people, which you have like a 25% chance of being in Florida, or somebody who does not have enough coverage and you're driving a fancy car, how much are you willing to pay out of pocket? How much can you afford to pay out of pocket? And then really think that maybe it's best to pay a little bit more insurance to have that coverage, that full coverage.
And even if you're not driving a fancy car, if it's a multiple car fender bender, for example, and they only have and the car that caused it way at the back only has $10,000, it won't go very far. So you might end up with basically nothing, just a small fraction of what will pay out because they'll just kind of divvy it out, among the people. And you might be trying to argue that someone else contributed because they were parked too close, stopped too close. And it's just, it's a lot of arguing. You can really cover yourself and protect your vehicle and ultimately your financial health and your ability to get to class and work and all the other things that you may need to do. That's very hard without a vehicle here in Central Florida, unfortunately. So underinsured, uninsured motorist coverage and medical payments. This is about protecting your body. Patricia, I think you know a lot about these, so I'll throw it to you.
All right. So uninsured. So that means if you are involved in an accident with somebody who does not carry bodily injury liability, because as we have learned, you're not required to in Florida, at least initially, or maybe somebody who covers bodily injury liability, but not enough to compensate you. So in that situation, you can then turn to your own insurer under your policy, under your UM policy, and say, okay, these are my personal injuries, and I have 100,000 policy with you for an insured motorist, and the other side only has 20,000 or nothing at all. So therefore, you're gonna have to pay me, and then go after the other driver. So basically, that's what an insured motorist is. And you talk to any personal injury attorney, they say you gotta have this. You gotta have this in Florida. Medical payments kind of works in conjunction with your PIP, because as we discussed, the PIP, they only cover 80% of your medical payments. And you still have a deductible. So with the medical payments, it could cover the other 20%. Your deductible plus anything over $10,000. So I once had a child, she was involved in an accident. She was hit by a car, and I guess the bills came to $18,000. So she went under my PIP because we are no fault state. And then my PIP paid, and then because I had the med pay and an additional 20,000 in med pay, they paid the deductible, they paid the copay, and they paid up to 18,000, and they paid the remaining 8,000 on top of the PIP. So it's something to think about. I mean, if you can afford to have it, it may not be that much extra. So it's something that's worth thinking about it.
And is styled like bodily injury liability, where it's so much per person and so much per accident. I think that's the only other type of coverage that's styled like that. Then rental, roadside, and sometimes it's called GAP, or Progressive, which I have, calls it loan payoff insurance. This really helps protect your finances. All of these things protect your finances, but this is kind of helping you directly with your money. So rental coverage, if you're in a situation where you have a covered claim and you need a rental car, this will pay it out. Now, if you're not at fault, part of the property damage might be getting you a rental car. But if this is a situation where you're at fault, or there's not enough coverage or something of that nature, you might be able to get your rental coverage. This is usually styled as so much per day for so many days. So I think my personal rental car coverage is like $30 per day for 30 days or something like that. To have, and if you don't have an extra vehicle that you might be able to borrow, or something like that, and you're still going to need to get around while your car's being fixed, or your car's been totaled out and you're trying to get a new car, rental coverage can really come in handy so that you're not in so much pressure to try to figure things out. Roadside assistance is, if you tow, flat tire, dead battery, stuff like that, lockouts, you can get roadside assistance. The one thing that people like Clark Howard and people who are smarter about financial ability than I am will say is that sometimes these companies, if you do it through your insurance company, will report it as a claim, and that can hurt you with your premiums, or if you're trying to change coverage and you have a claims history on there, it can be an issue. So sometimes you might be able to get it through your car manufacturer. I know I drove a Hyundai for a while, and they had roadside assistance built into purchasing a Hyundai. There's services like AAA, which is pretty popular, but kind of pricey. There's also, I happen to get it through my the dealership, not directly through the dealership, but the manufacturer as a separate thing. It didn't automatically come with it, but it was a separate thing that I was able to add on, and then it wasn't tied to my insurance. Unfortunately, that's coming to an end, so I'm gonna have to figure out what I'm gonna do after that. But this is good coverage to have if you lock your keys in the car. I know that when I got a new car, I was not used to having a fob where I didn't take the key out of the ignition. And as a result, I did lock my keys in the car after that. So, because they weren't in my purse, they had sat on the seat, and I just grabbed my purse and, you know, didn't think to grab my fob. So, you know, that definitely is helpful in those cases, because those lockouts, if you call some of those places, it's not very cheap. And then gap loan payoff. This is something you might consider getting if you have a newer car and you didn't put a lot of money down or didn't have a really nice trade-in. So when you drive off the lot with your car, whether it's a used car or a brand new car, the value goes down. So the amount that you financed may not be equal to the fair market value of the vehicle. So if you're in an accident where your car is totaled out, you know, they might say that your car is worth $8,000, but you still owe $11,000 on your loan. And so this sort of coverage that you can sometimes purchase when you purchase your vehicle through a company there, or get it as part of your insurance coverage, will cover that gap between how much the totaled out price is and how much you still owe on the loan. Otherwise, you might be in a very uncomfortable situation of having to roll over money for a vehicle that you don't have onto another car loan, and have negative equity on that car. And if that happens again, you know, you just can further and further bury yourself. I have a family member who has done such things, and so now has a car loan on a car much higher than really what that car is in any way worth. So it's really good to consider having gap. I know for me, when I bought my car, normally the finance guy is trying to sell you stuff, but since I had a fairly decent down payment, he's like, you don't need it. But other people might be in a situation for the typical car loan where gap can really be
Yes, especially with
very
car
helpful.
loans, especially with car loans being 4, 5, or 6 years long. At some point, you have to think they may be upside down and your car is worth less than what you owe. It's not fun to lose your car and then you out of the car, plus you now owe the finance company because it wasn't enough to pay off the loan, like Jamie explained. I mean, you know, the car they're saying is worth 8,000, but you owe 11,000. So now you still have to come up with 3,000 to pay your lender, and you're out of a car. So it's not a fun position to be in. So I think if you're looking at a long-term loan and you didn't put a lot of money down, it's definitely worthwhile to get the gap insurance.
Yeah, we've seen loan contracts for up to 7 years for cars, and we're not even talking about real fancy cars. I've seen students coming in just for Toyota or Nissan or whatever, just kind of your normal passenger car. They financed it for up to stretched it out to 7 years so that the monthly payments would be a little bit lower, but then they're on the hook for that period of time. And when you add in interest and everything, then yes, it's, as Patricia said, it's very easy to be owing more than what that car is worth when that car is steadily depreciating. Every month that car's value depreciates. So it's definitely a good idea if you're financing it, as we've said, to looking at getting the gap insurance.
Mm-hmm. And one thing to remember is when you're paying an installment loan, whether you're talking about your auto loan or your house mortgage or your student loans, at the very beginning, you're paying more interest than you are paying the principal, so the underlying balance of your loan. So I know that, when you first start paying your car loan, you know, half or so of your payment could just be interest, depending on what your interest is, or student loans. More than half of your original payment, your first payments are interest, and it takes a long time to kind of be able to chip down and actually get at that principal, which is why I always recommend just like round it up, just pay a little bit more every month, because that goes to that principal, and helps you have less interest, and it just really helps you snowball it if you can. But when you're first paying that, you feel like, well, I've paid all this money, but you really haven't touched the principal as much as you think you have. And if you're a year or two into one of those really long loans, and you're in a pretty devastating accident, even if you have collision, even if the other party has really good property damage insurance, they're only going to pay you the fair market value of the car at the time of the accident. So with the mileage, the accident history, all the other things. So you have to keep that in mind. So how to get the best rates? Auto insurance is very expensive, and we know it's very, very expensive for young folks. So the average college student, 18 to 25, unfortunately, you're paying the highest rates. Young single males are paying, are in that category. So there are lots of factors that actuaries say are good indicators of what your risks are, and that's what goes into coming up with what your rate is. So there's just different issues that you can avoid, obviously not being in accidents, so try to drive cautiously, try to use good habits, don't speed that much. If it's raining, turn your lights on, slow down, give yourself extra time. All of those sorts of things can go into it. Multiple tickets, watch your lead foot. I know I have a little bit of a lead foot. I have to be careful so I don't get a ticket. Poor credit. Credit is a risk factor for lending. So sometimes your insurance company will look at people who are risky finances and say, well, you're a risky person, so you're going to be risky in the car. Type of vehicle. So if you're a 18-year-old male that has had 5 speeding tickets and you drive a red sports car, you're probably going to have very, very high insurance. Just because of the type of vehicle and stuff like that. Anything that's considered sporty sometimes can be a way, even vehicles that cognitively I don't think are very sporty vehicles. Sometimes the insurance will consider it that way, and that will be that. You can shop around. There are some comparison tools out there for auto insurance that may be helpful. Just make sure that you're using one that is legit, because they usually do ask for a fair amount of personal information, and maybe it's my tinfoil hat, but we all know big data is out there mining information from us. So just be careful, and you don't know what the security is at those websites and what data they store. So, be cautious on that. Consider changing every year or two. I know I had one company and I switched to another one, and that saved me some money. Often new customers get better rate deals than existing customers, which really kind of doesn't seem fair when you've been paying your premiums on time for a long period of time, but that's just how it works. But you might lose some incentives that maybe that insurance company gave you for being a longer term customer. It may also be harder if you've been in an accident to change. So you might be stuck for a little while. Not that I know anything about that, but I do. So I know the company I'm with, after you've been with them for so long, if you have like a small accident, they might not hold it against you, and they define what a small accident is. It's ridiculously small. I don't know how anything would be that small. And then, you know, longer term, it's a larger a large accident. They won't hold it against you. So you do lose that, but you save some money. And bundle. So most college students that we see don't own a home, but a lot of times if you own a home, or you bundle your auto and renter's insurance, which you're going to get to in a moment, you may be able to get a discount by having multiple product lines from the company, you know, and that can kind of help with, helping your rates be lower. Being on a family plan, you know, sometimes helps. We know sometimes you guys don't really have a whole lot of control over the insurance because it's tied to mom or dad or another family member. But, you know, keep that all in mind. There's just some things you just cannot control for. So how much you drive, where you live, you know, all of those things will go into how they come up with what your rate should be, your gender, you know, as far as the risk factor goes, can be added in there as well. So just try to keep a clean driving record and compare rates. And then just be careful with some of the companies that are out there. We do on occasion see some of those lower rate budget companies, and then something happens and they have some like very odd exclusions in their policies that you wouldn't think that there are, or they can just be incredibly hard to deal with. I know that there's at least some repair shops that just won't even deal with those companies. So like, even if you're not at fault and you're trying to get your car repaired and the other driver had one of those companies that tend to have catchy jingles at late night TV, or at least used to, you know.
And any stars there?
Huh?
Any stars of those jingles?
I don't recall. I'm not going to mention any names. I'm not going to get hit with a defamation suit. But those, you know, more budget companies, sometimes I know I've heard from students that are frustrated because their auto repair place doesn't even really want to deal with this company, and they feel like they're being forced to make a claim under their own collision insurance, and it's just a big mess. So just keep that in mind. Be careful. Know what you're getting. You know, if you ever want to consult about your policy, you know, that's what we're here for. Again, if you have questions, I am monitoring the chat. We haven't gotten any questions yet, but you can definitely throw those in there, and we're going to be wrapping it.
Sometimes there's like a wide discrepancy between what insurance companies will charge you for the same coverage.
Mm-hmm.
And sometimes it's just so offensive to me to see how much students are paying for virtually nothing.
Mm-hmm.
You know, so I'll see somebody like with SPIP and $1,000 deductible, and it just has a property damage liability, and they're just paying so much money, and you wonder, couldn't they get something a little bit better?
Yeah.
Now I know like these insurance company sites,
Mm-hmm.
where, you know, you can put in information, they come up with live quotes. And
Mhm.
I was playing around with some of them, like there was Insurify, the Zebra.com.
I think
And
this.
it did come like with a wide
Mhm.
variant. So I put my information
Mhm.
into Insurify, and I said, okay, if I want the car that I have, I want 50,000 property damage liability and 100,000 bodily injury liability, and that already includes an uninsured motorist. And they came up with the lowest quote being $87 per month for Mercury, and then the highest quote being 192 per month from the general. So
Mhm.
that's a huge difference, like over 200, well, about over $100. So that's like over $1,200 in a year. So you just don't go to the first insurance company. I mean, get a few quotes,
Mhm.
because you may be able to get the same coverage for less money, and you have to compare apples and apples and oranges. So just because somebody offers you like really low premium, you have to see what coverage are they offering, because if they're offering a low premium but you're only getting the bare bones insurance, that might not be as good as a deal as somebody who's charging a little bit more, but they're giving you more coverage like collision insurance, bodily liability. So you really need to compare to make sure that you know that it's the same policy. You compare the same policy amongst different companies to see that you're getting the better rate, the best rate.
Mhm. And just remember, if you have a vehicle that's financed or leased, you're going to need to have comprehensive and collision. If you don't, you're in default of the loan, and that can result in a repo, and then it can result in a deficiency because whatever they sell it at auction won't be as much as you owe, and just really end up being some crazy financial consequences for you. So make sure that if you are in a loan, that you have what you need to have. And a lot of times, the more at least bigger insurance companies that I've dealt with, you have to tell them, is this vehicle financed? And then once you tell them that and who's it financed with, you can't change like certain sorts of coverage. Like I could change like the deductible on my comprehensive and collision to be higher or lower, but I couldn't change having that. So that's kind of, you know, where you're at with that. So keep that in mind as well. I'm going to move on to renter's insurance. So renter's insurance, it can really, really save a student's behind in certain circumstances. And it's usually, unlike auto insurance, not super expensive. So we really do encourage students to consider getting it. But just like auto, there's different types of coverage, um, as far as what will be covered. So with renter's insurance, your landlord's policy, if they even have one, and many of these student housing complexes self-insure, so they don't have a official renter's insurance policy. It's not going to cover you in any way. It's not going to cover any damages that happen to you. So if a water main bursts, or a hurricane or whatever happens, you won't get coverage for your belongings. It also won't cover you if you are start a kitchen fire, overflow your toilet. I've had a few toilet overflow cases of late, where the landlord is coming after someone for a pretty significant flood as a result of a toilet overflow. So that's what you have to keep in mind. We also are,
Did that person have renter's insurance?
thankfully, yes.
Okay, so you covered.
So yeah, there was $100 deductible. It's still in progress, but yes, one of the people did have renter's insurance. The other one was a while ago, so I can't recall off the top of my head. So yes, instead of having to pay $1,200 or whatever it is that the landlord was asking for, top floor flooded, the 2 floors below. So is only going to have to pay, I think, $100 deductible. So that's good. We also are seeing, I think, Patricia, you've mentioned that you've noticed this trend where landlords are requiring that you pay for a policy through them. But that policy is going to protect the sort of instances like I just talked about, the person who starts a kitchen fire, which I have seen. I've seen one where it was a roommate of the person I talked to, but fortunately they had renter's insurance and it covered them and they didn't have to worry about any liability charges as a result of that. And then I've seen one where the individual did not have renter's insurance and ended up being sued for a pretty substantial sum from that. So that protects the landlord, but it's not going to protect you if something happens to you.
And they usually tell you that. So usually it's like an addendum. So they require you to make an extra payment on top of the rent, which can be like $12, and that already includes like an administrative fee of $4 or $5 per month. But that only covers the landlord in case you damage the landlord's property, by negligence or whatever. Like Jamie said, a fire. Sometimes we have like the water, like the water sprinklers, and they go off on their own because maybe, I don't know, you did something or the landlord claims you did something, and then there's water all over the place and there's all that damage. So if you buy it through the landlord, it just covers the landlord. If you buy renter's insurance, it covers your personal property, it covers the landlord because it covers liability, and then it covers for your own living expenses if something happens that you have to vacate for a few days while repairs are being made. So when you get the 3 renters insurance, there's like the 3 different kinds of coverage. Whereas if you just go to the landlord, all you're getting is protecting the landlord's property, but not yours. So usually it's a better deal if you go on the private market and try to get it. Like, it's typically not that expensive, like Jamie said, especially if you bundle it with auto insurance and maybe life insurance and things like that, if you bundle it. So it's worth having.
I've seen some fairly comprehensive, good policies for under $200 for the whole year. So that's really what I recommend. And I've seen things, and I know Michelle had some cases after Irma, where there had been some flooding, and thankfully that person had had renter's insurance, so that it helped cover that person's belongings. But if you're on the 3rd floor and you have a minor kitchen fire, the kitchen fire itself might not be that big of a deal, but the sprinkler system's going to go off. And once the sprinkler system goes off, it won't shut off until the fire department gets there. So it's flooding your unit and the 2 units below you, and really can be a big mess. And that was basically that scenario. I've seen other scenarios where they had some people over and the person broke the glass top of the stove, or threw a beer bottle allegedly into the pool and it shattered, and then they were being charged for damages to have the pool cleaned and drained. So there's all sorts of things that potentially a renter's insurance policy could help with. And you're going to have to make sure when you buy the policy what exactly you're getting. I have seen where you can just buy the kind where you protect your belongings. There's usually a deductible, and then it just protects yours. I would encourage you to get a more comprehensive policy. Again, they're not very expensive, and it can really save your hiney, if there is that toilet overflow, because it can be really hard to prove to the landlord, no, I didn't use a extraordinarily large amount of toilet paper to do that. And if you have that, know that that little knob behind your toilet is the water shut the water off. But a lot of people don't know that. And then, in the 15 minutes or whatever it takes for maintenance to get there, there's a big mess from that. So it takes quite a bit.
Another thing, like just for I guess the personal properties, like, you can get like actual cash value or the replacement value. I don't know if you're gonna go over that or not.
No, just some tips here. We can touch on that in a minute, Patricia. Yeah, like we said before, it's usually not very expensive. A lot of auto insurance companies offer it as well. So you can bundle it with your auto insurance, bam, get those discounts and keep it moving. If you have unusually expensive items, so if you have a very expensive computer because you're into 3D gaming or you're in the digital design and so you need all that extra computing power, that may not be covered. Expensive jewelry items may not be covered, collector's items. So I've seen on occasion someone who has a very extensive designer, and I'm not talking Coach, I'm talking more than that, purse collection or something like that, that may be excluded from your average renter's insurance policy. So you may need to get a separate rider. So you'll need to inquire into that.
Typically, a policy will pay like maybe like a limit, a set amount for like jewelry. So it could be like $1,500 per piece. So if you have like a Rolex watch, or you have like a very fancy engagement ring that's worth significantly more, then you're going to have a separate rider, and you're probably going to have the property professionally appraised so you can get it insured.
And one thing to note is that if you do have expensive electronics or we know a lot of times in student apartment complexes they're furnished, but if you're in a more traditional apartment and you have furniture that I know it adds up. Even the most basic IKEA furniture adds up after a while. You want to keep your receipts for that. Another good thing to do is, like, once you get your room set up how it is, or maybe you know that there's a hurricane coming. I did this before Irma, is that I went around our house and shot some video just to kind of show what we have. So that there could be proof of what we actually did own for what it's worth, in case there needed to be some insurance claim for that. So that's always a good thing to do. So many receipts now are online, so in your Gmail, just make a folder and put them in there. I did that to my email years ago, and so now I have receipts dating back a decade or more because I'm old and of stuff I've purchased, just to have it in there just in case. It's a good idea to hang on to those because at some point you could be fighting if there is a flood or something of that nature with your insurance company as to the actual value of what you had. And Patricia's absolutely right. If you have something more expensive, a lot of times they're going to want to see an appraisal to get that. So anything else about renters that either of you want to chime in about?
No, I think we've covered a lot of it, but the main
you want the replacement value instead of the actual cash value, because you want to be able to replace that TV you bought 2 years ago with a new TV, not what the value of a 2-year-old TV is. Yeah. So and then there's the deductibles. Usually they can go from $200 to like $1,000. So if you're gonna choose $1,000 deductible, maybe you want to make sure that you actually have that money saved up, and you can come up with it.
But yeah, I think the bottom line is it's better to have it than not have it. I know we've gone into a lot of details about the different types of coverage, but it's definitely better to have it than not, because don't rely on your landlord to cover you in case something happens. And we've seen a lot of students come in with that misconception is, well, I didn't cause the leak, from the upstairs unit, or I didn't cause the weather hit our building or whatever and damaged, my couch is ruined and my clothes are ruined, and why won't my landlord pay for it? So if you don't have renter's insurance in those situations, a lot of times you're out of luck. Mm-hmm. So it's a good idea just to shop around, and like we've said, and get some, because it's not very expensive.
And almost inevitably, somewhere in your lease, it's going to say, even though the law is this, but it's going to say they're not responsible for anything to the extent that they can disclaim their responsibility for anything at all. Theft, they're not going to be responsible for third party breaking in. There's all sorts of other things that generally your landlord's not going to be held responsible for. And then there's all sorts of situations where an accident happens. You didn't mean to overflow your toilet. If you're co-tenants with someone, you're on the same lease, and they accidentally start a kitchen fire, they didn't mean to do that. Who wants to burn down their building? Not very many people, but it happens. And if you don't have any sort of coverage to cover you, you can be in a real tough spot. So it's better to have it. Renters, it's not very expensive. And then auto, to the extent that you can have as much coverage as you can afford, it's really, really worth it.
And shop around at least like once a year, shop around, see if you can get a better deal. Because I know I just did that with my daughter, and she went from, I think we were Farmers to, I think it was State Farm, and she got much better coverage and probably a third of the price. So you just like, sometimes you just get comfortable, you have the same insurance for a long time and you don't have time, but really it's worthwhile to at least annually try to see, what coverage you have, and can you get for the same price or less, can you get more coverage?
All right, just to wrap this up pretty quickly because we're over time. Our office again, Student Union 304. We're still primarily doing phone and virtual appointments, but some in-person appointments are available upon request. You'll see from my virtual background, I'm still remote, but Michelle and Patricia and our criminal attorney do spend some time in the actual office. Information how to contact us is in the description box below. So our phone number, give us a call if you have any traffic tickets, insurance questions, landlord issues, want a lease reviewed, so forth and so on. We're here for you as long as you're enrolled. To get credit for attending, you must fill out the survey. I'll pull it tomorrow and submit. And then just to give you a heads up of what we are going to be doing for our office coming up for the rest of the spring is that I will be partnering with Sensible Nights for their ID theft and more presentation in late March. If you go on their social media, there's information about how to sign up and attend, and I'll be putting more information on our social media about that as we get closer to it. And then we'll be back here on April 7th to talk about the end of the life of a lease and how to avoid ghosts from old leases following you in the future. We didn't have any questions, so I think that's pretty much it for today. Appreciate everyone who attended and watches this on the replay. Again, we're here to help. If you ever need anything from us, just reach out or give us a call or swing by our office in the Student Union, and we'll be happy to help. Thanks, guys.
Thank you.